If you've been considering taking out a home loan to either buy a home or even to refinance, you've got to stick around and watch this video. I'm going to be talking about how to shop for a loan, how to compare one lender's estimate to another. What's the difference between APR and interest rate? If these kind of things have puzzled you in the past, stick around, watch this video, and I'll answer all your questions. Hi, this is Matthew Scher, sharing my experience with you once again from the Real Estate for Atlanta team at Maximum One Realty. Today I'm coming at you with a virtual background. This is an actual photo from one of my current listings at 171 Golden Banner Avenue. This video is not about this house. I just thought I'd use it as a chance to plug this beautiful home. If you are interested though, I'll have a link below to a 360 virtual tour that you can take even during quarantine time. Let's get into it. This video is really about loans, how to shop for a loan, how to compare fees. The biggest mistake that you can make when shopping for a loan is to look at only what the interest rate is and go with the lender that has the lowest interest rate. The reason is that there's a combination of interest rate and fees, and it can get kind of confusing for somebody who doesn't know how to break it down. So that's what I'm going to explain to you today. When you contact the lender and you get pre-qualified, whether you're buying or refinancing, you can ask for an estimate or a fee sheet. When you get that, you're going to see something that looks a little bit like what I'm going to put up on the screen right now. As you look at this, I don't know if you can read the numbers or not. They're kind of small. I'm hoping you can. But the fees are along the left side. And if you look at this example here, the interest rate on the right side looks fantastic. As of this was done April 15th of 2020. Interest rate 2.75%. That's an incredible rate. And an unsuspecting buyer might think this is a fantastic loan because everybody else is coming in at 3.25%, 3.5%. However, when you look at the fees along the left side, you'll notice that they're charging this borrower $1,595 origination fee. That is a fee that the lender is charging. And they're also charging discount points, $4,371. A discount point is basically prepaid interest. What you're doing when you pay discount points is you're buying down your rate. So you're actually paying for that lower interest rate. And if this lender were to quote something with no discount points and not have that $4,500 charge that you have to pay at closing, you would have had a much higher interest rate, probably in line with or maybe even higher than the other lenders who may have quoted you without the discount points. So you've got to be careful about that. And if a lender gives you a quote and it's no discount points and or no origination fee, you can even ask them, if I paid $4,500 in discount points, what could I buy my rate down to? And it might even be a better deal than what this lender presented. The other thing to look at is the other fees. Some of these fees are lender fees. Those are the only ones you really need to be concerned with. The other things that are on here, like the credit report fee is insignificant. An appraisal fee is going to be pretty much the same no matter what lender you use. They may vary for $25 or $50, but they're going to be pretty similar. All these other tiny little charges are insignificant. But when it comes to things like the title, settlement, closing fee, that's the closing attorney's fee, and the title insurance, the cost of that. Those are just estimates of third-party fees. Those fees are going to be the same regardless of what lender you use. So you should take those kind of fees out of the equation and not even consider them when comparing lenders. The only thing you're interested in is the fees that the lender controls. Some lenders present their estimates on a standard format that actually breaks it down and has a special section that says fees that the lender controls. I like when they do that because you can easily see what fees they're actually charging you. Let's see, another thing I want to point out on this thing, another mistake that buyers make is they just look at the total monthly payment and they say, oh, if I do a loan with this guy, my monthly payment's going to be $1,787. But if I do it with this other guy, it's $1,900 or whatever. But again, that's because of some of the estimates. They can easily underestimate your taxes or something like that, make your monthly payment look lower, and they're just really confusing you. And so that's not a good figure. The monthly payment is not a good way to judge a loan either. And another thing I want to point out in here, in this example, is what this lender did is they made it look like, see the cash to or from borrower, it actually shows a negative amount. So the borrower's thinking, wow, what a great deal. I get a 2.75 interest rate and I walk away from the closing table with $430 cash. It doesn't get better than that. The problem with that is if you look at the lines above it, it explains that the debts to be paid off, this was a refinance. So the person owed 226 on their home. When they finish taking out this loan, their loan payoff goes from 226 all the way up to the bottom line number, the total loan amount of 235. So all this lender did, they're still charging them those thousands and thousands of dollars of closing costs and discount points. They're just rolling it into the loan balance. Also, when you refinance, be careful. If you've had your loan for a while, your first payments for the first few years are almost all interest. And then gradually you start chipping away at the principal. Well, if you have a 30-year loan and you're 10 years into it and you're just getting to the point where you're starting to chip away at the principal and you refinance it to another 30-year loan, you're resetting the clock and you're actually paying more interest by doing that over time. So that's another thing to look out for on a refinance. And then my other final piece of advice is a lot of people have a question about what's the difference between, you'll notice on here there's a interest rate and there's also an APR, and the numbers are very different. On this one, the interest rate is 2.75. The APR is 3.168. What explains that difference? If you've ever been to a grocery store, you may have seen what's called an item unit price, which is a price per ounce or a price per item or whatever in the package, a price per unit. That allows consumers to easily compare the price of one size package to another. Well, the APR is the loan equivalent of that. What it's doing is it's taking all of those fees we just talked about, factoring them in and spreading them out over the total duration of the loan, whether it's a 15 or a 30-year loan or whatever duration. And it's giving you what your effective interest rate is over that period of time. That APR is actually, if you were comparing two loans in terms of value, the APR itself would be a metric you could use to know which is the better deal. The only problem is that with loans, the one with the lowest APR may not be the best for you personally. The lowest APR loan will be the best for the person who's going to take out this loan, take the entire span, the 30, let's say 30 years to pay it off, never pay more than the minimum, never refinance, and never sell the property in that 30-year span. If you're going to be doing that, then the loan with the lowest APR is going to be your best one in the long run. But if you're going to say live in this house for 5 years and then potentially move again, which is what most people would do, or refinance at some point, or pay additional principal and pay the loan off early, well, if you're any of those categories, then you're actually better off with, the lower fees, lower closing costs, but the higher interest rate, because you will be paying that higher monthly payment slightly higher, but for a shorter duration of time, and you won't make up that entire fee structure. It's a little complicated, but I usually help my clients. If they show me a couple estimates, I'll ask them how long you're going to live there and everything, and I'll crunch some numbers and tell them for them what I think is the best option and kind of advise them. So if you are looking for a home and, or even if you have an estimate and you want me to do that, please, feel free to reach out to me. I'll be glad to kind of review it and give you my opinion on which one I go with. A couple of final notes about loans, particularly for a purchase loan. It's extremely important to not, even if one loan is a slightly better deal than another, you need to know that the lender that you choose, the quality of service, the speed at which they can get the loan underwritten and approved, all matter, especially on a purchase transaction. So sometimes if you go with a lender that has low fees and low interest rates, they may be a bad lender. They may sit on your file until the week before closing and then scramble to try to get everything and then tell you need to extend. And meanwhile, you've already booked movers and the contract doesn't allow you to extend or whatever reason, and it turns into a big problem. So the level of service that you get, the accessibility of your lender, are they reachable? Do you have to wait on hold to reach them? Can you always reach the same person? Can you reach them only during business hours? These are good questions to ask your lender as well. Once again, this is Matthew Share, helping people get their fair share in real estate. If you like this video, please go ahead and click the subscribe button. Also, if you'd like, I have some really helpful home buyer and seller guides that I'm giving away absolutely free. And this is just filled with timely information about how to sell or buy a home. So I encourage you to click the links below. You can request your free copy. Also comment below, let me know if there's other topics you'd like me to cover. I'm always looking for new topics. I publish a new video every Friday. So I hope to see you at next Friday.